Dan, thanks so much for being here with us today. It's been kind of a wild ride, and every day I wake up and I wonder, okay, so are we going to worry about the coronavirus today, or are we not going to worry about it? And so far today, it doesn't look like we're going to worry about it. We could be adding here to some of this record run that we've had. Does the coronavirus not change things fundamentally? Because it's really having an impact on container volume. You've got Yum China saying its same-store sales could be down 40 to 50% during the Lunar New Year. Frank just told us Starbucks is closing a location. So I don't get it. Why are we not worried about it today?
Well, I think that the view right now is that it's contained and that it's going to follow a course that will be months, and the impact will be perhaps a quarter or perhaps into the second quarter, but then you'll make back a lot of that towards the middle part and latter half of the year. And that's where I sit right now with what I know about the virus at this point. I don't think that it's going to impair economies around the world, but it definitely pushes out a bullish scenario that I had for the markets that was much more of a linear fashion. I was on here, we were talking about Middle East tensions just weeks ago. So we've gone from a shortness of supply of oil, or the potential for that over Middle East tensions, to now a glut of oil and concerns about global demand. But I think it's quite interesting that China is lowering their tariffs. That functions almost like a tax cut internally, and is stimulative in addition to the other efforts that they're making at the central banking level. The United States could do actually the same thing to countermeasure potential weakness here, that we could lower tariffs on China in reciprocity for their actions. So it'll be interesting to see what happens as we go forward.
And so as you look at all of these cross currents, a lot of them are geopolitical in nature.
Yeah.
What are you doing with your portfolio? Does this change your fundamental thesis about how you should be invested?
Well, I think we're holding a little bit more cash than we would normally. We're not really changing around the sectors that we think are going to outperform. We remain very pro-cyclical, and the way we're doing that is through financials, industrials, and materials. We're a little more selective within technology because there's a little bit of valuation issues that you need to look at. Within healthcare, there's a lot of opportunities now, particularly as the political situation in the United States begins to unfold. Some of those overhangs, particularly for areas like managed care, are becoming a little bit more clear, and the outlook for those companies might be improving.